Right. So then today we are looking at audit and assurance, advanced audit and assurance. I'm combining the two groups, that is CPA and ACCA. Now you realize in most of these exams that these examiners give to us, they no longer test this rote learning. Nowadays in audit and assurance, the examiner would want to test your business acumen. So business acumen, this examiner would give you like a scenario, big scenario. In ACCA, they call them exhibits. They give you a big scenario about certain business. They tell you quite a lot which is happening there. Then they would expect you to identify things like business risks, to identify the internal control systems which are not working, right? So some of these things are not things that you can really be able to get from study books, the textbooks, no. Some of these things need you guys to really be conversant with what is happening outside here in the business world, all right? Now, today, I want us to look at one great case question that has got all those business risks, right? How to mitigate them, right? And then most importantly, if, for example, you have those risks, you've been able to identify them, you've been able to mitigate them. If, for example, you have discussed those risks with the management, and then you realize as an auditor that those risks are going to affect what we call going concern, all right? What kind of audit opinions will you be able to provide? With me, ladies and gentlemen, here is a great question that I would want to share with you so that it can really assist me to mention here. Great stuff. Yeah. So somebody is asking which topic is this. I'm telling you, with this subject, ladies and gentlemen, at times it's not even about the topic. At times, in this case, it's just about business cases, business knowledge, and then you use various topical issues to answer the question. So we are told here about Azure. Yeah, Azure. Yeah. So that is, of course, RCM College. And for those of you who do not know me, my name is Dr. Joshua Aura. I teach ACCA, I teach CPA at RCM College. If you want to get in touch with us for purpose of registering with us, this is our number, 0719 525 000. So I'm looking at this Azure airline question. Very intense question. You shall always start these kind of questions by reading the requirement. So requirement, they want us to identify and explain business risks. Identify and explain the business risks facing Azure Limited, 9 marks. B, they want us to describe how the risks identified in A could be managed and maintained at an acceptable level by Azure, 9 marks. Suggest 4 measures of operational performance and the evidence that should be available to provide assurance on their accuracy. Then we have another question here, D, where they want us to identify and explain assurance that might be provided by an assurance engagement on an integrated report. So remember, in terms of assurance, we have what we call reasonable assurance and we have limited assurance. So we have reasonable, and the limited. Okay, and limited assurance. So in terms of audit, we don't talk about absolute. We don't talk about absolute. You see, absolute assurance is where you are giving guarantees. Yeah. So here we shall never give any guarantee because remember, ladies and gentlemen, that at the end of the day, the kind of work that we are doing as auditors, how does it look like? You know, as an auditor, for example, I'm running an audit firm. I come to audit your organization like Kenya Airways. You see, for sure, there is no way I will be able to go through all the information to ascertain that everything is accurate. our work as the auditors is to sample. We test controls in your company, and if we realize that the controls are working reasonably well, then we shall not do a census. We shall be doing what we call sampling. So if, for example, you've got 1 million invoices, if, for example, I simply work with, say, 10,000, check, even 10,000 will be too many, all right? And I realize whatever number that I've been able to sample is okay, then I'll be able to make a general conclusion about the organization. And because we are using sample information, we cannot give guarantees. We cannot come outside here in our opinions, and then we say that, hey, these accounts are absolutely correct. There's nothing like that. The very best we would do is to give what we call a reasonable assurance. Reasonable assurance. So we have got reasonable assurance, and then we have got, ladies and gentlemen, what we call limited assurance. And a reasonable assurance, of course, in this case, as we shall be seeing, here at least we are able to dig a little bit here, all right? We are able to dig a little bit to collect some evidence. When you collect some evidence, even if it's on a sample basis, at least now we can reasonably give some kind of an assurance. It will be 80%, 70%, but it can never be 100%. All right. And then, of course, as you shall be able to see, there are some situations where we'll never be able to do a lot of research on this company here to be able to provide that reasonable assurance. When, for example, you're given what we call PFI, prospective financial information. Yeah, financial information in the future, like the budget, like the forecast. You see now there, really, there is nothing much of evidence that you can easily go and look at to ascertain that the figures which are in those financial statements are accurate. When they are forecast, the only thing that I will be able to check is the reasonableness in terms of the assumptions that they have given. All right. So are these assumptions reasonable? Are they, for example, conforming with the general business environment? So you see in that case here, then what I can best do is to give somehow some kind of an assurance, but the assurance will be limited because it's not based on concrete evidence. So basically, we have got 4 types of assurances. There are 4. We have what we call absolute. We have, in this case here, what we call reasonable, quite a high level, but not absolute, reasonable. Then we have limited. And then we have no assurance totally. There are places where we give 0 assurance, no assurance totally. In terms of audit and assurance, we only use these 2 middle ones. We only use what we call reasonable assurance and limited assurance. And as we study this today, we shall be able to look at this reasonable assurance also being known as what here a positive assurance. Positive, because at least I've collected some evidence. So I'll be able to say that the financial statements of RCM portray a true and fair view. I'm reasonably, positively agreeing with who? With the directors of this company, positively. But limited, we shall be able to see that we give what we call a negative assurance. So negative assurance, as you'll be able to see, we shall be talking over, there is nothing that has come to my attention. Yeah, nothing has come to my attention to make me doubt the budgets that are being presented to you. Nothing has come to my attention. All right. So that kind of wordings will be known as what here? Negative. So at least I'm trying to give you a high level knowledge of this. So as I start doing this question, you guys will be good to go. All right. So identify the types of possible conclusions which such a report might do what here might give. So I have suggested answers there. But before I go there, ladies and gentlemen, please allow ourselves to go through the question now. Aha. So I'm told here that Azua Limited was incorporated in Sepiana on 1st March 2008. In April, the company exercised an exclusive right granted by the government of Utah to provide twice weekly direct flights between Lime, the capital of Utah, and Darke, the capital of Sepiana. The introduction of this service has been well advertised as efficient and timely. So you see, already I can see a risk there. We have really advertised this service to be efficient and timely. So what if customers come and then we realize that our aircraft, for example, is broken down? Reputational crisis. The introduction of this service has been well advertised as efficient and timely in national newspapers. The journey between Sepiana and Piuta is expected to be significantly reduced, so encouraging tourism and the business development opportunities in Sepiana. Azua operates a refurbished 35-year-old, and yet you are advertising for services which you are saying in this case here are what here? Efficient, and yet in this case here you're running quite a rickety, in quotes of course, aircraft, very old aircraft, which is leased from an international airline and registered with the Putin Aviation Administration, the PAA. The PAA requires that engines be overhauled every 2 years. Engine overhauls are expected to put the aircraft out of commission for several weeks. And yet, in this case, you've been given an opportunity where you are supposed to be running 2 flights every week. And remember, this is quite a very, very big risk that you only have 1 aircraft, which in this case here has to be put out of business by this very, very aviation administration, the authority, for maintenance. It's required to go out there for maintenance. And when it is outside there for maintenance, it has to be out of commission for several weeks. The aircraft is configured to carry 15 first class, 50 business class, and 76 economy class passengers. The aircraft has a general hold capacity for Sepiana's numerous horticultural growers, e.g. cocoa, tea, and fruit, and the general cargo. I would rather handling this general cargo than handling what we call perishable goods. There will be quite a lot of hot cases that can come my way when I'm handling these horticultural goods. So they want me to identify and explain the business risks facing Azua Limited for 9 months. Now, and gentlemen, let's see whether you guys are in a very, very good place of explaining at least 5 of them. At least 5 of them. At least 5 of them. I would want to hear from you. At least 5 of them. Yes, the risk. Remember that I told you from the very beginning, your examiner would want to test your knowledge of various businesses outside the hotels, airlines. And once you are okay with them, you can never go wrong. So identify, and remember you can say anything. So long as you know that when they tell you to identify, whenever they tell you to identify the risks, they simply want you to state the following: what could go wrong in this company? What can go wrong? What can go wrong in this company? So please always go with that question whenever they ask you to identify risks. What can go wrong in this very company? Let's discuss what can go wrong in this very company. Maybe I could give you one of them. We are dealing with a very old aircraft, my friends. When you have an old aircraft, you go wrong with it. So there is a possibility that this aircraft may require more frequent maintenance and repairs, which of course means that this very aircraft is, we will be needing a lot of repairs. All right. All right. So I'm giving you the first one. Now they expect you, great student of mine, to give me the others pretty fast. Let me hear from you. Let me hear from you. What could go wrong in this company? Oh, great. I can see here. Thank you so much. I can see your answer here. Refurbished aircraft, quite an old aircraft, they will lose business for both passenger and cargo when they need to overhaul the engine. Downtime risk, delays in flights, poor transport services. We have operational risk, delayed flights due to engine overhauls, aircraft breakdown. Since it is 35-year-old, like these joys. The perishable goods may go bad quickly due to delay of flight. Hence, in this case, there is the possibility of court cases. The old aircraft can break down and they don't have a replacement aircraft, hence give the business to competition. Wow, I mean, that's very good. Operational risk, the old aircraft will require a lot of OTR maintenance, so the maintenance cost will really go high. Now, ladies and gentlemen, all of you are very bright, but you can see that all of us are oscillating on just 1 point. On just 1 point. And yet, there are so many things that could go wrong. There are so many things here that could go wrong. So many things. Like reputational risk, I like what Christian now is telling me. One aircraft is unreliable, okay. Yeah. Compliance, I like this now, John Bosco. Compliance risk due to delays of flights. Compliance risk due to delays of flights and being fined due to non-compliance with aircraft regulations. That's very good. But now remember, you need to do what here? You need to separate those two risks. You need to separate those two risks. Thank you so much. So then let's read this answer together, my friends. I really love you guys. You guys, you are not a joke. So identify and explain the business risks facing Azure Limited. The first one is the age of the aircraft that everybody was able to see. Everybody was able to see this one. Everybody was able to see this. But Azure operates a refurbished. Azure operates a refurbished. Azure operates a refurbished. Azure operates a refurbished 35-year-old aircraft. Due to its age, just give me 1 minute. Give me a minute. Just 1 minute. There is something I'm doing. So, all right. So I've changed my sound system. I would want to get feedback from you. Am I audible? Am I audible much better? Am I audible much better? Are you guys able to hear Mwalimu? Great. Thank you so much. Great. Thank you so much. Great. Thank you so much. So then we continue. You see, Azure operates a refurbished 35-year-old aircraft. Due to its age, the aircraft may require frequent repairs and maintenance, and may be more susceptible to breakdowns. This could result in increased operating costs, flight cancellations, loss of revenue, and reputational damage. Number 2, engine overhauls. Another risk, business risk. The PAA requires the aircraft engines to be overhauled every 2 years. The overhaul will put the aircraft out of operation for several weeks. Since Azure appears to operate only one aircraft, this could result in flight cancellations and significant loss of revenue. Remember, we discussed and say that business risks will be those dangers. What can go wrong in this company? Yeah, passenger and the crew safety. The airline industry is exposed to significant safety risks. An accident or serious safety incident could result in injury or loss of life. Legal claims, increased insurance costs, and severe damage to Azua's reputation. Regulatory and compliance risk. Azua's operations depend on an exclusive right granted by the government and compliance with the PAA aviation requirements. Failure to comply with relevant regulations could result in penalties, suspension of operations, or loss of right to operate. Weather risk. Adverse weather conditions may result in flight delays or cancellations. This could lead to loss of revenue, additional operating costs, and customer OTA dissatisfaction. 6, reputational risk. Azure has advertised its service as efficient and timely. Frequent delays, cancellations, or poor customer service would therefore damage the company's reputation and result in loss of OTA customers. Fuel price risk, the normal risks now here. Fuel is a significant cost of any airline. An increase in fuel prices could substantially increase Azua's operating costs and reduce profitability, particularly if the additional cost cannot be passed on to the customers. We have the lease risk. Azua leases the aircraft from an international airline. Changes in lease payments, unfavorable lease conditions, or termination of the lease could increase costs or disrupt Azua's operations. So you can imagine if this international airline by itself, if it was to be very busy in its operations, it can easily come and reclaim its aircraft. And we have seen this is really common in the business environment. At times, ladies and gentlemen, even where like RCM has operated in the past, we've been in some building where we were able to build a lot of traction. Yeah, we had a lot of inquiries coming there, and then the owner colluded with somebody different. They came and they started their college adjacent to us. Simply, they were telling us, you guys go. All right. So lease. Anytime you hear a question talking about lease, always remember to claim the lease risk, demand and capacity risk. The aircraft has significant passenger and the cargo capacity, but operates only twice a week. If demand for passengers travel and the cargo transport is sufficient, Azua may experience low capacity utilization and insufficient revenue to cover its operating OTA costs. Then part B of this question, describe how the risks could be managed and maintained at an acceptable level. How do you manage and maintain whatever risks you've raised up there at some acceptable level? So in this case here, the mitigation. How do you mitigate? I want to hear this from you, first of all, before we look at the answers. But remember this second part, ladies and gentlemen, on mitigation, we are asking ourselves, what can management do about it? So I want to hear from you. I'll give you exactly 2 minutes. Everybody, remember you've already raised your risks up there if it is age of the aircraft. So talk about how do you mitigate against that? What are you going to do? Please put yourself in the shoes of this airline. Imagine like you are the CEO. You're faced with these dangers ahead of you. So you reason like a CEO here. What would you do? And please, a CEO will always talk. Everybody shall talk. So as I read your answers, whenever it comes to mitigation of risks, management of risk, whenever it comes to management of risks, yeah, you must understand the 4 approaches. You don't have to mention each one of them, but at least you should be able to have these approaches in mind. Number 1, we have the concept of acceptance. There are risks that you must be able to accept. Yeah, and we accept risks where the impact is low. Accept where its impact is low. B, or two, reduce. This is another way of managing risk. Reduce. Reduce through controls. Through controls, training and monitoring. Training and monitoring, very, very important. Three, the third approach is avoid. When the risk is very, very high, always avoid unacceptable. Unacceptable risks. Number four, transfer. Transfer risk through insurance. Let me know, ladies and gentlemen, whether first of all you've been able to write up to where Mwalimu has reached. Let me know whether you guys have been able to write this concept of risk mitigation procedures, the four approaches. Yeah, at times you get your examiner calling it the TARA framework. Eh? TARA framework. TARA framework. Yeah, transfer, accept, reduce, avoid. Avoid TARA framework. Whenever you see TARA framework, it's not really a very, very big terminology. TARA framework. So have you guys been able to write it? Have you finished writing there? Great. Thank you so much. Thank you so much. I can see you guys, actually, we don't even need this session. Already you guys are CEOs. The arguments you're making here are really, really great. They are great. I'm really happy. I'm really happy. So I'll start from the very first. How many points were required? Of course, you're putting there 9 marks. Because, you know, for ACCA, these are very good ACCA questions. They give us so many. But if you have 4 good points, you should be able to get, the question should have been like 8 marks. But ACCA, they have their way of marking. So they put like mostly odd number of marks. Yeah, Terry, that we can mitigate this through compliance with the regulatory framework. Opt for purchase of a new aircraft to mitigate age of aircraft risk. But it's going to be different inspection. Wow. Great. As what should establish a clear service recovery. Yola, you never finished. Lease newer planes, okay. Lease a newer aircraft or buy the aircraft instead of leasing. The airline may opt to purchase a newer airplane to improve services. I love that. You guys have very good English. Limiting operations on a weather day. Yeah, bad weather. Yeah, lease a new aircraft to replace the old one. Increase the number of aircrafts to deal with the number of passengers. Merge with another modern. Wow, Chris. Merge with another modern airline company to share risks, pool resources, enhance operational efficiency, and strengthen market competitiveness. Increased inspection frequency, involvement of an auditor for assessment of risk and recommend. As well should establish a clear service recovery protocol. Wow. To protect reputation. Thank you so much, Yola. Risk transfer, insurance for the aircraft transfer. When it comes to weather, that can be termed as an acceptable risk, as it is something that can't be controlled. Acceptable, accept it. Move on with it. Mary Wanjiro, the airplane can choose cargo that is less perishable to avoid a lot of legal action. Lease a new aircraft and also ensure frequent maintenance so as to mitigate the delay of flight and engine overhaul, as to ensure a good reputation of the business. Increase the number of flights from twice to 4 or 5 times, yes. Is it breaking or is it my internet? So am I audible? Am I audible? Am I audible? Am I audible? I can see John complaining there. All right, then it must be John's internet. Thank you so much. So, ladies and gentlemen, I don't know whether you've been able, this question you must lay down. Check out this. So suggest or measures of, no. Yeah. Describe how the risks that you have mentioned above, the risks that you have mentioned above will be managed and maintained at an acceptable level. So you must go to each risk you raised there above. We start with the age of the aircraft. AZUA should implement a comprehensive preventive maintenance program and carry out regular aircraft inspections. All maintenance should be performed by appropriately qualified personnel in accordance with the aviation what year requirements. It's old. Now, given that it's very, very old, we also need to really up our game in terms of maintenance and have on board engineers who are renowned, who are approved by this regulatory authority, engine overhauls. AZUA should plan engine overhauls well in advance. The lease agreement should contain appropriate contingency arrangements, such as access to a replacement aircraft during major maintenance period. Wow, this is great. This is great. Just like how I normally make arrangement with my insurance company, whenever my car breaks down, these guys are able to give me their car, like for 3 weeks, as my car is being repaired. So when I'm taking my comprehensive insurance, that is something that I'll always ensure it is put in place, given the nature of my work. Passenger and crew safety is one of the risks we raised above. AZUA should maintain an effective safety management system, provide regular safety training to employees, comply with all aviation safety requirements, and obtain adequate insurance cover. Yeah, so that in case we get into an accident, our passengers, of course, God forbid, normally there will be an issue, no aircrafts, rarely will be people in this case here, mostly they die, right? But at least when we have an insurance cover, then we transfer the risk to the insurance company. Regulatory and compliance risk. AZUA should establish effective procedures for monitoring compliance with government and PAA requirements. Responsibility for regulatory compliance should be assigned to appropriately qualified and experienced personnel. So if it is a compliance in terms of financial reporting, ensure that the person who is working on those documents is a member of ACCA or is a member of ISPA, fully qualified. Yeah, somebody in this case, in case of an issue arising by coming up, we can easily go back to ISPAC and tell ISPAC, we have your member on our board. These guys who are not doing this and this, and they will be punished. The same case with all the professionals in this very aircraft industry. Have the people who are doing compliance, ladies and gentlemen, being members of those regulatory authorities, professional organizations. Weather risk. AZUA should regularly monitor weather forecast and establish contingency plans for flight delays and cancellations. Passengers and cargo customers should be informed promptly of any disruptions. Reputational risk. AZUA should establish clear customer service standards and regular monitor flight delays, cancellations, and customer complaints. Corrective action should be taken promptly where service falls below expected standards. Fuel risk, like Kenya Airways in this case here the other day, when fuel was really, really misbehaving, they bought what we call a fuel derivative. A fuel derivative. So basically here, you do what we call hedging. We do what we call fuel hedging. So a hedge is a fence. A hedge is a fence. Whenever there are risks here, ladies and gentlemen, risks here, it's important in this case here, if this is our home, we need this fence to protect ourselves. Against what here? Any bad intruders, thieves, for example. The same case with this fuel derivative. You simply organize with people outside there, you transfer that risk, such that if this fuel, for example, hits more than talk of say 200 per liter, this is the maximum we can ever pay. If it goes beyond that, as we are protected, we can only pay a maximum of 200. And for now buying this derivative, then automatically we shall be charged. AZUA should monitor fuel prices, negotiate favorably supplier agreements, and consider appropriate fuel hedging arrangements where commercially viable. Lease risk. AZUA should negotiate a comprehensive lease agreement, clearly specifying lease payments, maintenance responsibilities, insurance obligations, termination conditions, and arrangements for replacement aircraft. Demand and capacity. AZUA should regularly monitor passenger load factors and the cargo capacity utilization. The company should undertake effective marketing and establish relationships with tourism businesses, corporate customers, and horticultural exporters. The most important thing, ladies and gentlemen, now that you can't afford another aircraft, please enter into partnerships with other airplanes. Whenever you have got a higher demand than your capacity, you can easily sell out these customers too, like now what we have under the KLM. Remember that arrangement. Ladies and gentlemen, this is a paper that you've marked for so long. And I know where many people get it wrong. I know where many people get this wrong. People will be asked about how do you mitigate risk, and then they simply start saying insure, transfer. No. Your examiner wants you to straight away go to the various risks you mentioned up there and talk about each one of them. Talk about each one of them. Are we comfortable, ladies and gentlemen? Are we comfortable with that? Somehow. And remember, you don't have to remember all of them. You are only required to just state four. Just state four. Are we comfortable? Are we comfortable with that? Yeah, great. 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 Now, then you'd be able to allow Mwalimu here to simply go to the next question. So the next one, they wanted us to suggest 4 measures of operational performance and the evidence that should be available to provide assurance on their accuracy. Suggest 4 measures of operational performance. Yeah. And the evidence that should be available to provide assurance on whether those performance measures are accurate. So, ladies and gentlemen, for us to really ensure that operationally we are very efficient with our aircraft, what are those key things? What are those key performance measures that will be able to really track and follow? I will give you 2 minutes to think about this. I'll give you 2 minutes to think about this. Remember, this is what we basically call KPIs, key performance indicators for an airline. Of course, remember here that a measure you put in place without evidence is not a complete answer. And that is why even in your answers, I would want you to basically be making tables. If you want to always be right, whenever they ask for more than one thing in a question, come and make a table like this. So we have here the KPI and we have here evidence. That way we'll be able to kill one bird with two birds with one stone. 2 birds with one stone. You mentioned the KPI, you mentioned the operational measure versus the evidence. Now, ladies and gentlemen, please, I would want you to listen and listen to me very, very carefully. Myself, I've traveled. I like traveling. Anytime I get any little chance, I'll always want to move around because I get to learn so many things through traveling. Like in Kenya here, I'm 100% sure I may not be the most traveled in Kenya, but in this class, I can assure you, maybe 1 or 2 people can beat me in terms of having visited many areas in Kenya. The only area I have not visited, which I would want to visit this time around, is Turkana, Lodwar. I would really want to go to Lodwar. But all these other places, Masai Mara, Mombasa, Malindi, wherever, Meru, Abodogoshi, some arid counties. Yeah, like traveling because you get to learn a lot. You get to learn a lot. Yes, Busia. Busia, remember we crossed even the border to Uganda. Even Uganda itself, I like traveling quite a lot. Now, for those of you who like traveling, especially internationally, if you are given, for example, Qatar Airways, all right, we have Ethiopian Airways, we have Kenya Airways. Which one among those three airlines would you prefer to move around with? Which one pleases you? Somebody who has never used the three of them. Qatar, I can see Qatar. Wow, great. Ethiopian, that's also got an Ethiopian, is quite good. Emirates, okay, great. Like Emirates, even how they are air hostesses, in this case, how they dress up. I mean, it's really wonderful, yeah. Yeah. Now, if you look at all those guys, there is nobody who is talking about Kenya Airways. Nobody is talking about Kenya Airways, imagine. The pride of Africa. Why? Because Kenya Airways gets it wrong in many, many things. Number one, their pricing, I normally find their pricing to be over-exaggerated. Yeah, their pricing is normally over-exaggerated. Very expensive. Very, very expensive. Especially, they don't even know that like the high flyers. If, for example, right now, I want to be in Mombasa, say by about 4 p.m., and then I try booking, either directly or through an agent, they will really knock me down with what are very high price, as opposed to, in this case, to some of these airlines you have mentioned there. They normally get it wrong in terms of what year cancellations of their flights. They have improved a little bit nowadays. Sometimes back, like last year, but one, it was chaotic, I can tell you. They would book, in this case, an aircraft from here to Mombasa at 10 a.m. one, and then of course they will keep on telling you, wait, 12, yeah. Especially for local flights, very, very expensive, yeah. Great. And then where they get it wrong, ladies and gentlemen, I mean, there are things they don't know. I remember sometimes back, I had applied to become a CEO at Kenya Airways. Went there, did interview. Of course, I wasn't given the job, and that is why we are here today. If I was given the job, I would be out there, of course, suffering. Right now, I'm here, and I'm happy. All right? Those guys have everything wrong from their food. Yeah, you'll always get passengers complaining too much. All right? And even that food, especially for short flights, they'll start serving their food when it's like, when you start hearing like, I mean, now we are at 10,000 or 30,000, whatever, per sea level. I mean, you know, when we have already stabilized, in a few minutes, we'll be told that in this case here, we are now 10 minutes to, for example, whatever airport. Now we are starting in this case, because they don't want you to eat everything there, right? If it's Ethiopian airline, the moment you've checked in, they're already with you there, all right? They simply wait for that stabilization a little bit. They're with you there because they would want you to consume their services. Look at the kind of air hostesses or air hosts. I told you the AMA class, ladies and gentlemen, you'll get that it is only Kenya Airways that has got somebody of my age, 50-year-old person being a house. That cannot happen in these other airlines. Because, ladies and gentlemen, remember, there is some age, which in this case here allows some foolishness. Sorry for using that term. Yeah. So you can imagine this is a 21 or 23-year-old girl. You're giving this girl 400,000 Kenyan shillings a month. I'm telling you, this girl, when these customers are offboarding, when they're offboarding from this big Boeing, yeah, like 700 customers, that girl, 400,000 a month as a air hostess will be there smiling throughout. How are you, sir? Next time, fly Ethiopian Airlines. We were happy serving you. because of the 400,000 and her age. But now when somebody is 40 years, unajua kuna ile kitu kama mimi kusema kweli nimechapa. I don't know whether John Bosco understands some Kiswahili. Nishachapa. Hiyo ndio ukweli wa maneno. Lazima tunakubali. Unaona? Hizi kadi za vijana wadogo. All right. All right. So you get like everything about Kenya Airways is wrong. You see, for example, we have what we call ground. Yeah. When this aircraft is on the ground, they are normally charged some rent. It's like they're renting the airport space. If, for example, you have ever flown, for example, through the Emirates ETC, those guys are very serious with cleaning their aircrafts when they are still up there. They're doing a lot of cleaning, so that by the time they reach down, then they always know this aircraft on reaching down, we should get, in this case here, for example, guys checking it for fuel very fast. You even get their fuel vehicles running very fast when they see an aircraft coming down, all right? You have, in this case, a maintenance engineer with a very good booklet, where they're simply, in this case, they're checking everything. They know that, for example, them, whenever they are on the ground, it's only 30 minutes. Look at Kenya Airways. Kenya Airways, something small like this, you'll get their flights being down even for 8 hours. And the airport is charging them for the time that they're down there. So those are the kind of KPIs, and please don't go to an exam and then you start saying that Mwalimu said that a KPI, key performance indicator, is being less than 23 years old. That's just but a joke. You can as well get people who are a little bit old, but very aggressive, isn't it? Yeah, you can get people who are a little bit old, but what here, somebody very aggressive here. Very aggressive. Mary wanted to become an air hostess. To me, if you ask me, that is really not a very good job. You'll be surprised. Okay. Yeah, Rwanda Air tries quite a lot, yeah. But of course, it's a high price. It has got high prices. Rwanda Air, John Bosco Way defeaters. You guys have got very young girls as well, and very tall ones, very tall ones. Yeah, very good. They should improve. Air Arabia, I've never tried Air Arabia. I should be able to try. Great. Passenger safety training employees on measures are great. So now that we've discussed that, let's go to the answer, and then we finish this. So identify and explain this. That's where we finished. B. Yeah, suggest 4 measures of operational performance and the evidence that should be available to provide assurance on the accuracy. Normally for aircraft, you shall be big on your customers. You shall be big on your employees. You don't want a scenario where employees are always picketing, where employees are going, in this case here, for what year? Strikes, which is an attribute that is really associated with Kenya Airways, which is really bad. On-time flight performance. Azua could measure the percentage of flights departing and arriving on time. Departing and arriving on time. You know, you could depart on time, maybe 10, but you reach around here because of disorganization in terms of your airport space. So you're told, for example, that there are now 2 planes in your line. So the pilot is telling you that we have to keep on moving round before, in this case here, we get to descend down. So it wastes like your 10, 20 minutes, and of course puts even passengers at risk. The accuracy of this measure could be verified by comparing scheduled flight times with actual departure and arrival times recorded in flight logs, airport records, and PAA OTR reports. Ladies and gentlemen, have a CEO who is able to push this kind of agendas. Have a CEO who is ready to even resign if there is a very big variance of this, say, like in 1 year. So on 1 year, for example, you have like 60% of flights missing their scheduled timings. This CEO should be able to go home. All right. Passenger load factor, very important. ACCA could measure the number of passengers carried as a percentage of the total seats available. The accuracy of this measure could be verified using passenger manifests, booking records, boarding passes, ticket sales. Because at the end of the day, ladies and gentlemen, we don't want to fly empty. We would want our financials to be okay. And our financials can only be okay if, in this case here, we are going down to our destinations with a fairly high percentage of what here? Load factor. Cargo capacity utilization, ACCA could measure the actual tons of cargo carried as a percentage of the total cargo capacity available. The accuracy of this measure could be verified using cargo manifest, airway bills, invoices, and the independent weight what year records. I mean, the moment you simply mention that whatever cargo you've carried 1,000 kilograms, and the capacity is 2,000. Then this is 50%. 50%, sorry, just 1 minute. 1 minute, there is somebody who has unmuted themselves. 1 minute. That's Rachel. Mute. I don't know how this happened because I have been able to, just 1 minute. Let me make sure it will not happen again. I go to host tools, participants. I should have done this. Yeah, all right, thank you. All right, then we have flight reliability. ACCA could measure the percentage of flights completed without cancellations or significant delay. The accuracy of this measure could be verified using flight schedules, aircraft logs, cancellation reports, and the independent what year? Yeah, independent airport records. They are very important ones that these guys have left out of this, very important. Like number of passenger complaints, I will have to take this. Number of passenger complaints. These are very, very important KPI that I should be able to measure. Yeah. Number of safety incidents. This is something I should be able to keep, like Kenya Airways is very good with that safety. Yeah, very good with safety. That one we have to give it up for them. Very good with safety. Aircraft downtime. Yeah, I will be interested in percentage of fast, business, and economy class. Seats occupied. Seats occupied. ETC. All right, with the permission, ladies and gentlemen, I will be able to go straight away to D now. So D, they wanted us to identify and explain the assurance that might be provided by an assurance engagement on an integrated report. Now, remember integrated report, these are what, ladies and gentlemen? Integrated reports. These are basically our ESG. Actually, we talk of what here? FESG report. FESG report. So we have our financial statements. F is financial statements, environmental reports, social reports, governance reports. When you put all of them together, you add them together, put them in one annual report. We call that report what? Integrated. Now, ladies and gentlemen, as I go to provide assurance to these reports, assurance to stakeholders regarding this report, I would have to do a lot of evidence collection. I'll have to do a lot of evidence collection. So when I'm doing a lot of evidence collection, it means, ladies and gentlemen, that I can only give what we call a reasonable assurance. I can only give what we call a reasonable what here? A reasonable assurance. Reasonable assurance. I can only give what we call a reasonable assurance. Anytime you hear about an assurance to be given, in light of an exercise where you have to do a lot of evidence collection and analysis, always vouch for what we call reasonable assurance. An assurance engagement on Azua's integrated report could provide either reasonable assurance or limited assurance. Let's see the argument. But what I know, that gentlemen, here we are supposed to provide, in this case here, a reasonable assurance. Why? Because we're going to do quite a lot of what here? Yeah, a lot of evidence collection and analysis. But let's see what the argument is here. We start with reasonable assurance. Reasonable assurance provides a high but not absolute level of assurance. The practitioner performs sufficient appropriate procedures to reduce assurance and engagement risk to an acceptably low level. The conclusion is expressed in a positive what here? In a positive form. In a positive form. Yeah, in our opinion, the integrated report has been prepared in all material respects in accordance with the applicable what here? Criteria. Or rather, the integrated report prepared portrays a true and a fair view. Portrays a true and fair view. So that's positive. Reasonable assurance provides greater confidence to users, but requires more extensive procedure than what here? Evidence. And for sure, whenever you're auditing FESG reports, you will be able to put in extensive procedures on the evidence that you gather. And remember, these extensive procedures, ladies and gentlemen, are the ones we normally call RAEOU. So we have to get those financial statements and then do what we call analytical procedures. Yeah, analytical procedures. So an analytical procedures we're analyzing. We take the financial statements like for the last 5 years, and then we are able to do what, ladies and gentlemen, compute ratios and design trends. In this case here is the inquiries and the third-party confirmations. Inquiries and the third-party confirmations. Inquiries and third-party confirmations. Yeah, inquiries and third-party confirmations. All right. So in this case here, we have inspection. We must inspect so many documents. For me to come and say that, hey, these financial statements are kind of accurate. They present a fair, we don't use the word accurate because we are doing reasonable assurance, but they portray a fair, a true and a fair view. Then I have to inspect lots of documents. I have to do a lot of observations. Yeah, especially observations of internal control systems before we do what here we say, hey, we are relying on them. We have to do a lot there. U is about recalculation and reperformance. So if it is a depreciation that you have on your books as an auditor, I will ask you, hey, I have to compute this very what year. I must compute the depreciation that you have there. I don't trust it. Give me the fixed assets movement register, the PPE register. Give me your assumptions. Let me recalculate this figure. So before I give my opinion on this FESG, yeah, if it is environmental issues, I must attain myself that for sure these guys are doing the correct things. They don't have in this case what we call green conmanship. Green conmanship is where you hear companies coming outside and saying that, hey, we have planted 1 million trees, because they know that there is nobody who is going to give an assurance report on the same. All right. So if it is social, I have to see for sure this company, how is its social report? When they say, for example, that they're paying 35% of their revenue to their workers, are they really paying this amount? Are their workers happy? Are their workers happy? I will need to do all of the inquiries on the same. All right. When they say governance, we have Martin Odura as the chair, blah, 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 blah. How effective is the board? I have to really look at, for example, the board members, how many times they attend the board meetings, and what is the average time. Because there are board members who come to board meetings simply for purposes of doing what here, earning allowances. So if the board is not effective, then automatically I'll be able to report. But for me to do that, I must get evidence. I have to get, in this case here, for example, what we call board minutes. They are board minutes. They cannot tell me that as an auditor, you cannot audit board minutes and these are confidential. No. Once you've signed up with me as your auditor, then I have a 360 degrees scope in your company. You can't tell me that now this is the master bedroom, that you cannot come into this bedroom. No, no. So you see, when I'm doing that, I'm collecting some evidence. And when I'm collecting some evidence, ladies and gentlemen, then automatically, and I'll be able to analyze it, then automatically, whatever opinion I'll be giving will be reasonable opinion. And because I've collected the evidence, which now makes me feel a little bit comfortable here, not 100%, but I mean significantly comfortable, then I can give what we call a positive opinion, where I'm agreeing that the financial statements of RCM, for example, portray a true and a fair view. All right. Now let's continue reading here, my great friends. So we are told here, ladies and gentlemen, the conclusion, here, limited assurance. Limited assurance provides a lower level assurance than reasonable assurance. The practitioner performs less expensive procedures than would be performed in a reasonable assurance engagement. The conclusion is expressed in a negative form. Remember, when it is limited assurance, assurance. In this case here, we talk of what here? Negative assurance or negative form. We are not giving, in this case here, like a bad assurance, a bad report. No. Remember, I told you, my great students here, that we have four types of assurances. We have absolute assurance. We have reasonable. We have limited. We have no assurance. Yeah, you see, no assurance, you're not providing any comfort at all. Yeah, this is what we call the non-assurance services. So this one does not, if you want me to give absolute guarantee, absolute assurance, then you have to give me a lot of money because I have to go through each document. This one does not exist. This one does not exist in practice. This is what we work with in most of the cases. But you have to know that a reasonable assurance, then I have to gather what we call sufficient, appropriate evidence. You have to rely on to be able to give this reasonable assurance, which will lead to what we call a positive form opinion. And a limited assurance, ladies and gentlemen, in this case here, of course, you're not saying that you don't gather any evidence, but the evidence you gather will be very little. Even the procedures that you'll be able to put in terms of their scope, again, it's minimal. So you're doing very little work. And because you are doing very little work, then you give what we call a negative form. You give what we call a negative form. So on a negative form, what are you telling us? You are telling us that there is nothing that has come to my attention to believe that these, for example, forecasts are wrong. Nothing has come to our attention. You see, nothing means what you're negatively. So in this case here, the opinion is negatively worded. Negative. There's nothing that has come, nothing. All right. Now, the gentlemen, please listen and listen to me very well. Limited assurance provides, you're told here, limited assurance provides a lower level of assurance than reasonable assurance. The practitioner, which the auditor here performs less extensive procedures that will be performed in a reasonable assurance than. The conclusion is expressed in negative form. For example, based on the procedures performed, nothing has come to our attention that causes us to believe that the integrated report has not been prepared in all material respects in accordance with the applicable criteria. Limited assurance may be appropriate where some of the information in the integrated report is non-financial, subjective, or difficult to measure. They are right. They are right. They are right, ladies and gentlemen. Why? Because, now they are right here. Because they are talking about what is this integrated report. I was wrong. Integrated report, ladies and gentlemen. Remember financial, here most of this, you can really measure. But when you go to environmental issues have a lot of what is subjectivity. They have a lot of subjectivity. So in this case here for environmental, even social, the development of subjectivity, and those ones, it will be very, very good that at the end of the day, you provide what we call limited assurance. You're limiting yourself. You're saying, hey, I did not have enough procedure to warrant me to provide what we call a reasonable assurance. I hope, ladies and gentlemen, up to here, somehow we are together. Are we together somehow up to here? Are we together somehow up to here? Are we together? Please give me feedback. Are we together somehow up to here? Are we together? Are we together? Great. Thank you so much. Thank you so much. So then let's finish this question. So here they want us to identify the types of possible conclusions which the assurance report might give. So basically, here they want us to give them the types of what here? Opinions. They want us to give them the types of opinions here. So remember, we have what we call unmodified opinion, good opinion. So under this unmodified opinion, we are telling the whole world that the financial statements of RCM portray a true and a fair unmodified opinion. All right. You will get some people calling this what here, in this case here, unqualified, although they are without any qualification. Although the proper term should always be modified. And then we have what we call modified opinion. So this modified opinion, what we have there. Remember, ladies and gentlemen, as an auditor, you can only modify. Remember the ISA, the International Auditing Standards. They normally prescribe a format that we should follow whenever we are writing down our conclusions. They normally provide a format. So if this format is not really, really good for you, because these companies' financial statements don't portray a true and a fair view, then you have to modify the structure. You must modify the structure. So to modify the structure, in this case here, to modify, there are two reasons. Either number one, the financial statements are erroneous. They have an error. Or number two, in this case here, there is a limitation in your scope as an auditor. A limitation in your scope as an auditor. You know, as an auditor, I told you as an auditor, ladies and gentlemen, once you have been given the job, you are given and fitted. You are given, in this case here, access, which should not be blocked. If it's blocked, then you have limited my scope. So two things. We have here material, and then we have material and pervasive. Two things there. Yeah, material. So remember, this is what we call singular, and this plural. So I've come to audit RCM. RCM has been very good to me. Their financial statement that they have given me, for example, if it's the income statement, sales is correct, cost of sales is correct, All right. They only have in this case here just one thing. So this correct. They only have, for example, distribution costs, which are wrong only. You see, this is just one item, single item. So if it's a single item, then we shall be able to, in this case here, qualify it alone, bring it out alone. So in this case here, whenever it is singular, a single error, please give, in this case here, a qualified except for opinion. So whenever it is singular, just one item amongst many. Yeah. So you qualify that item alone. A qualified except for opinion. So you'll be able to come and tell us that, you know what? The financial statements of RCM portray a true and a fair view, except for the fact that their distribution costs were what year were erroneous, except for the fact that their distribution costs were erroneous. Qualified. But what if in this case, the gentlemen, I go to this very company, I get the sales are wrong, cost of sales are wrong, distribution cost wrong, everything wrong. Will I go and say that the financial statements of RCM portray a true and a fair view, except sales, except cost of sales, except distribution? I'll be called auditor except. If in this case here, the errors are material and pervasive, they are mainly plural, then in that case here, you issue what we call an adverse what year, an adverse opinion. You issue what we call 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 an adverse opinion. So there you shall issue an adverse opinion. Now, ladies and gentlemen, the same case with scope. You know, I'm an auditor. I run an auditing firm. And every now and then, we get to see wonders. We get to see bad things in the market, at the workplace. Do you know there are places, ladies and gentlemen, where you simply go in as an auditor, and then every person runs away from you? Those who are an audit, they understand what I'm talking about. You're going to get evidence from these people. You've been able to jump in like this, and then everybody runs away. Nobody wants to give information. People fear auditors. And remember, we are partners in this. We want to create value together. Auditing of nowadays should not be looked at the way they used to look at auditing, to do auditing even in the old days. No, we are coming in, we assess things, where things are not working, ladies and gentlemen, we shall be able to discuss with you even before we give an opinion. Our aim is that you need to correct and put systems in place to ensure that you are profitable, to ensure that your operations, or rather you'll be there in the long term. But places you will go, people run away from you. There are places you go. They know the audit is supposed to be coming like a week from today. And then the finance accounting department is burnt down. That is a very serious limitation in our scope of operations. Very serious. Very, very serious. So in this case, if they limit my scope, these people, for example, have been very, very good. Yeah, very, very good in terms of how they've been allowing me to access whatever I want to access. They're giving me information. But perhaps in this case, it is only one area where I was only limited, perhaps because of, if it's only one area, then one area, one singular, I should give a qualified except for opinion. So I'll come and say, it's, for example, a college, a college does not have really pervasive stock items. Everyone was not able to attend a stock take, but I was able to get all our staff. I'll be able to come and say, the financial statements of RCM portray a true and a fair view, except for the fact that I was not able to attend what year this stock. And the limitation was only one. But what of the situation where they'll come and tell you that the accounts department got content? I cannot get any receipt. I cannot get any voucher. Ladies and gentlemen, in that case here, I should be able to give what we call a disclaimer of opinion. I will not claim anything totally. I will not say that I was able to reach whether unmodified or adverse opinions because I don't have any evidence. The limitation here is so pervasive. It's so big. It's so big. Now, ladies and gentlemen, then with your permission, we shall be able to go back and read this very question. Identify the types of possible conclusions which the assurance report might give. So we have a modified conclusion. And a modified conclusion is given where the practitioner concludes that the integrated report has been prepared in all material respects in accordance with the applicable criteria. For example, in accordance to the applicable IFRSs. Qualified conclusion. A qualified conclusion is given where there is material misstatement or inability to obtain sufficient appropriate evidence, but the effects are not pervasive. They are material, but they're not pervasive. Adverse conclusion. An adverse conclusion is given where misstatements are both material and pervasive, such that the integrated report is seriously misleading. A disclaimer of conclusion is given where the practitioner is unable to obtain sufficient appropriate evidence and the possible effects of undetected misstatements could be both material and pervasive. So then, gentlemen, that marks the end to that very question and the end to my today's training. The end to my today's training. It is my hope that you guys have been able to pick great stuff that you can easily use to pass your exams. And then, of course, you'll be able to do more questions on this. Thank you so much. Be blessed. Unfortunately, tonight, I will not be available for AMA. Very, very bad. I don't like canceling my classes. Yeah, I can share the handout here, yes. I can share the handout here. I can share the handout here. Why not? All right. So I hope you've been able to see it and you'll be able to download it. So my daughter participated in some mathematics, high school mathematics competition. She's quite good and maybe better than me in mathematics. So this was happening in Kuala Lumpur. And again, she came talks. So she's supposed to go to the US, yeah, where they have finals. And now how with their mother, now they have organized a bash at home. So I think it's important I attend because there are so many people are coming. If I miss that one, it will be very, very bad for this daughter who has really done very, very well. All right. So then I'll be able to tell you in the group so that you excuse me for tonight. It's very, very important to attend. After all, in terms of AMA, I'm finishing the syllabus. So even one day off, I mean, it's not bad. Thank you very much. Thank you very much. Bye-bye. Bye. But tomorrow we have AFM, remember. Tomorrow we have AFM, remember. Thank you. Oh, by the way, I've really missed the FR sessions. We shall overcome. I will tell you when we shall be able to resume with this FR and AFR. Yeah, thank you.